Hello, it's Richard Harris at the FundForum Asia 2015 in Hong Kong, and we have with us now Avi Nachmany, who's the Executive Vice President and Director of Research of Strategic Insight. Strategic Insight have been around for about 30 years and really looking to help asset managers with data gathering and intelligence in the industry. So we're very pleased to have you with us, Avi, because hopefully you'll be able to tell us exactly what's happening.
It's the first time I'm here at the FundForum Asia. It's a great event. I'm coming back.
Well, that's good. I'm sure the organizers will be very happy with that. Moving swiftly on, Strategic Insights, just tell us a little bit of what you've been looking at most recently and what you've been talking about in the last 2 days.
Sure. I mean, I've founded the company with a partner 30 years ago. The industry used to be much more compartmentalized, different markets, different country. In recent years, there's much greater harmonization of the industry, investment strategies, investor attitude, fund innovation, active and passive, smart beta, traditional, non-traditional strategies. So the product strategies are coming together, but importantly, the regulatory harmonization in the industry all over is the most dominant trend of recent years, and we see regulatory trends in North America, in Europe, in the UK, in Australia, in Japan, all these coming together, and I think they are dramatically changing the business opportunities in the landscape.
The regulatory landscape, what asset managers would say is, yes, they are becoming tighter, but they're not becoming any more homogenous, because after all, we have to do one thing in Taiwan, one thing in Hong Kong, one thing in Europe.
Clearly each market has its own subtleties, but there's certain aspect of the regulatory attitude that are very much harmonized. Transparency, the conversation around shareholder cost, the shift from compensation at point of sale to fee-for-service attitude, what we have seen in the UK, what we're seeing in the Netherlands, what we see in Australia, clearly in Canada, and what, interestingly, last week I was in Japan, and you see a dramatic transition in the business model in Japan from compensation and new fund ideas to fee-for-service, asset allocation, rep relationship.
So are you seeing a general trend around the world now that many are saying that we're going from having, say, big front-end loads to sell funds into almost no-load funds and it being sold by fee?
Absolutely. I mean, this is very persistent. It's going to be pushed in each market. Clearly, smaller market, more evolving market will address it differently.
But we tend not to see that unless the regulators push it. They're pushing it hard in Europe at the moment. They're not pushing it in Hong Kong, so we don't see it. We still see big front ends.
There are different aspects of it. In the UK, you see much more of a benevolent dictatorship offered by regulators. In Japan, it's much more subtle. But I think this trend is here to stay. I think it's very important for the AMCs, it's very important for the industry association also to be thoughtful, to provide the right set of information for that conversation, to prepare for the continuation of these regulatory forces.
And products themselves, do they become more homogenized? As a result of this regulatory homogenization, aren't we starting to see certainly big products, some of the big commodities products, some of the big equity products are being sold all over the world?
It's excellence. It's an issue of how do you measure excellence. Clearly, there are some types of strategies that tend to be more homogenized. Others, as we move to asset allocation, as we move to mixed assets, as we move to solution, actually you become less homogenized, because what's your allocation to stocks, what's your allocation to bonds, to real estate, to non-traditional strategies. So some parts of the business becoming more, and other parts are becoming much less.
Where's the power base going from? In the old days, it was the asset manager, hedge funds managed to hold that a bit, but really a lot of the power's always been the distributor and the distributor network.
Of course. I mean,
is that changing at all with the advent of technology, for instance?
Technology changes how you do business. I don't think it changes the power. I'm a big believer in the importance of advice. I'm a well-informed investor. I have a financial advisor who is 80 years old to help me manage my affairs.
You need that experience.
I am a big believer in the importance of relationships, and I am not so sure that technology is going to supplement. There's a lot of conversation about technology and robo-advisor and Google. I'm not so sure that in times of great duress, you would let your iPhone manage your family wealth.
So lead us out then with do you have a roadmap of where we're going in the future with this kind of investment?
My assumption is that the two biggest markets in Asia, Japan is very quickly, very dramatically changing. China clearly very dramatically changing. There's a lot of conversation about passporting, about product. Clearly, the two biggest markets are changing. That will create a conversation in the local markets, in the smaller market. Directionally, I think the road to fee for service, asset allocation conversation, seeding properly the next generation of investors, as we see now in Japan with the new programs there, is the right long-term foundation. But to be seen. So if the two biggest markets are changing dramatically, other markets will have their own dialogue along those lines.
Well, I'm sure we'll be sitting here in 12 months' time talking about the same thing and the dynamic change that has happened.
Maybe even earlier than
Avi,
that.
thank you very much for joining us.
Thank you.
That's Avi Nachmany of Strategic Insights, and I'm Richard Harris, and we're signing off from the FundForum Asia 2015 conference in Hong Kong.